Yo, good morning, traders. Happy Monday, and welcome back to another episode of Market in the Morning. I hope you guys are excited to make some money this week because we have some volatility coming in. We had some peace talks over the weekend. We have FOMC. This is Kevin Warsh's first FOMC meeting this Wednesday at 2 p.m. Eastern. So make sure you guys tune in for that episode too. But guys, run that like button up if you're ready to make some money because Market in the Morning starts right now. All right, ladies and gentlemen, let's start right off the bat with some of the headlines that have come in. And of course, we do have Nalab joining us too. Guys, good morning. Catherine, welcome. Good morning.
How's it going, Kevin?
Yo, what's up, Nalab? Good morning. How are you, man? How
All
was your
good, my
weekend?
friend. All good, all good. Just started the new week, ready to attack as we always do. And now let's have a fantastic week.
Yeah, bro.
How's your weekend?
Let's get it. We have some updates to market. We have some headlines over the weekend. Where do we start?
I'll tell you where to start. Start by sharing my screen, buddy. Let's start there. Good call out. We've had a ton of new stuff added. One of the big ones is you will see now when you open up markets. I'm going to turn off these labels for a second, these annotations. You will now see scenarios. So what scenarios are projected price scenarios with structural pullback zone that align with the overarching fundamental bias. So one thing that we know that happened over the weekend, actually 30 minutes before market open, the elites of the world got together. They said, hey, let's put an end to this theatrics for the time being, and let's do a peace deal. And that's what they got right before market open. We got a peace deal or a peace deal because their attacks are still going on. It's most likely temporary, but going forward right now, we can see the markets are taking this as optimistic to the point where ES opened up with 100+ point upside gap. Now, if you remember the previous market in the mornings where we were mapping out this corrective structure and then calling it out, hey guys, that structure is starting to shift. On Friday, we called out this beautiful buy that took place. We called out the pullback and then the buys, and now we open up with the gap. And guess where ES is now sitting? US equities are basically at all-time highs. You heard it here first. We said, hey guys, this move is going to get corrected eventually. The first actual confirmation or hopes of a peace deal are going to bring this right back. Now, what can we look for here? If we go back to this area and we start looking at all the other places where we've had such extreme movements, you can see we either do some sort of corrective pullback, which happens in cases like this, right? Or we do quick consolidation, push up, quick consolidation, push up, another quick consolidation, push up. And that's just how markets work, right? Either you're going to get some sort of retracement, a pullback, going to give you better buy entries, going to give you better pullback entries, or what you'll end up getting is a move that gets continuation, get a slight retest, and heads towards the upside. The main thing is everybody needs to think of the financial markets as a game of probabilities. Nothing is certain. I don't care who you are. I don't care how often you've been in the markets or how long you've been in the markets. Nothing is certain in the financial markets. So what this means is that you have to think about price and pathways of price in terms of probabilities. What is the probability that ES and S&P continues from here all the way till 7705? Or is a probability greater that we pull back because overnight we've just been rallying and we've been pushing above this continued gap that we had? So that's why we added scenarios. And you can go on to any of your the markets on market. that's a tongue to say that. Say that 6 times fast. Markets on market. And you can check out the scenario. So we can see that despite gold being bullish in the intraday right now because of the tensions being de-escalated, we still have potential to dig a bit. We'll have a little bit of a pullback as we're tapping into this supply zone. So we're going to be looking to see how markets actually react to this supply zone. But I think one of the more favorable trades will be on ES and on US equities because that sentiment is so clear arching right now. Now, I'm going to remove my Picasso paintings from here and we can go through some of the analysis that we can look out for this session. How does that sound, Kevin?
Bro, let's get it, man. Let's get it. Yeah. Success this week, man.
Yes, sir. Yes, sir. Just like every week, we're going to have a very successful week.
Yes,
We're
sir.
going to be prepared. We're going to map out scenarios, and then we're going to attack. That's the main thing, is that we're going to have that conviction to actually attack the financial markets. One quick thing before I move on, and I'm looking at gold over here. I will just open up our GC chart that we had on Friday. This is before the peace deal, guys, so keep that in mind, okay? This was right before the peace deal. We were talking about areas where gold could further pull back and get sells from, as we had been riding these sells all the way from March, right? So we now see just a corrective pullback happening in the intraday time frame, right? Now there's certain structural points that gold has to break past before it can continue higher. In this case, being this key supply zone here, gold would have to break above here in order to get up into 4400s, correct? And then they would have to break above 4480 in order to get into 4500, and so on and so forth, as that bias, intraday bias, remains a bit more bullish right now. If that was to change, you'll see a flip watch show up here in case some sort of event happens that absolutely breaks the peace deal. Then you know that, okay, sellers are likely to come back because we have escalations. But right now, since market open, we can see clear signs of that escalation, as well as since that initial where Trump came out and said, hey, we're almost close to a peace deal, sentiment pushed up, intraday buyers jumped in, sellers were trying to defend 4240s. You can see they failed, and then they succeeded for Friday, but over the weekend we had the peace deal happen, hence the gap towards the upside, hence the continuation, and that's why we were able to catch these double bottom buys over here in Asian session, because it's such an easy setup. Now, when you see a gap like this, you must stop thinking in the way of, oh, hey, this gap needs to fill. Nothing needs to happen in the market. You don't need to make money. What you need to do is pay attention to what price is doing in the moment, and don't get lost in the financial markets, and don't get lost in the charts. So in this case, what price was doing in the moment, you clearly see a gap towards upside. You see price retracing, okay? You see price create some sort of support over here, right above 42.75, a key psychological area. This is at 42.80. You then see price continue to respect that support for a span of 30 minutes. For a span of 30 minutes and almost an hour, you see price respecting that support. Price heads back up to 43.07, retraces, creates another higher low, and boom, where does it go? Goes to the next in a higher time frame demand zone, supply zone. So what does it start to tell you? This starts to tell you, oh shit, we had the switch in sentiment over the weekend. It was right before the markets, and this was right before the markets open. So think about that we went from the entire weekend of the peace deal not working out to markets opening in 30 minutes and Trump coming out, peace deal done, guys. Pakistan comes out, peace deal done. That's unexpected. That markets were not expecting that to happen 30 minutes before open. So of course, all markets are going to open up with massive gaps. You got ES opening up with a 100-point gap. You got gold pushing up from 4,200 to 43.07 and gapping up $100 basically. You got oil absolutely gapping down from 84 to 80. And as I always mention, I'm always honest about positions I take, losses I take. In this case, I tried to do the play that we have done every single week since the war started. The easy buy oil on market close and wait for it to pop up on market open because of weekend escalations. After the 10th time, it didn't play out. Let me tell you that. I bought oil on market close right here.
Oh,
And right on market open, we got that deal. But I had already accepted that loss when I saw that deal happen. And before I even went into this position, because it is a riskier buy, because we know it's based off of hunch, it's based off of human psychology, and that's how this has been playing out over the course of the past 3 months. You can backtest every Sunday market open. You can see how we've gapped up. There's been one or two where we didn't gap up, but every other market open, because we've constantly talked about this, that weekend escalations happen on the weekend. But now that oil is sitting at 80, this doesn't necessarily mean the war is over, right? It's still a very elevated price point. The Strait of Hormuz is still not fully open. So we still have to watch out for these things. And I'm telling you, we would be the first people to tell you if everything was gone, if we were completely changing focus, if the market was completely changing its focus from the war and inflationary fears to now dilly-dallying back to rate cut expectations, we would be the first people to tell you. Because guess what? I would be buying the shit out of gold all the way back to 5K. I would be buying ES on every single pullback. We'd be the first people to tell you that. But everything's still up in the air. The deal is still not fully finalized. Iran's not going to give up their nuclear capabilities. US isn't going to stop. Israel isn't going to stop until Iran gives up their nuclear capabilities. So now think about it logically. What could possibly happen? Is this more short-term lived upside, or is this something that's more sustainable? And now we're shifting structure. In this case, time will tell, but we can take information as it comes and continue to attack the financial markets. We can continue to see that, hey, what's actually supporting the bullish bias on gold right now is the US-Iran peace deal, which is boosting global optimism, right? It's also weakening the US dollar. Multiple countries welcome the accord, reinforcing confidence in lasting agreement. Vance even said Iran nuclear deal gives US enforcement authority. Yeah, right. Buddy, Iran's going to control the Strait of Hormuz. Iran isn't going to let you guys take a piece of that. They're going to control the fees. Them and Oman are going to control that strait. Strait of Hormuz reopening accord underpins confidence in negotiated outcomes. You will be surprised at how fast this optimism switches if this deal doesn't work out. And then guess what's going to happen? It's going to flip. We're going to flip on gold. We're going to flip on oil, and you'll see oil rally back into higher 80s. But only time will tell, right? And that's just the opposite scenario. That's what we always preach, is that markets are a complete probability game. So when you're looking at the financial markets, you have to keep in mind, yes, we've been pushing up. We pushed up from 4,000 to 4,340. This is a supply area. Maybe the probability is that we push into here in New York, and we might get some sort of corrective phase that drives us to a better buying price point, right? Some sort of there, or maybe even come down to here. And even on market, we have something like, hey, if we come down to 42.45, this key support area, and a little sneak peek, guys, I don't think you guys have this yet, but we got some new drawing tools that have come up, and you'll be able to completely select whatever you want your drawing, save them, add Fibonacci, or whatever you do. So anyways, you have this over here. You can clearly see that there's some sort of structure over here. So if I was to get some sort of pullback into here, or even into the lower end where you have price actively defending this area and buyers defending 4170s, then okay, that's a high probability buy area. But what could come before that is the fact that, hey, maybe we do get a little bit of a push into this area before we see sellers jump in to liquidate. Buyers also liquidate their position, sellers jump in to drive price down. Remember, it's always a transaction. There's always a back and forth happening between buyers and sellers from key price areas. And this just happens to be one of those key price areas that we were even watching out on GC when we were talking about, hey, this is the area we could see a little bit of selling pressure, or that initial selling pressure that builds into this sort of position. Now you have to think about this on a long-term perspective, and we'll get into this, but some quick trade ideas real quick, because I really do want to talk about the upcoming FOMC and the interest rate decision and what Warsh could set out to do. So now when we're looking at US equities, we have this massive gap over here towards the downside. And we know that if that gap if price comes down here, guess what? This would be a very good area to buy. Why? Because if you're buying up here, why wouldn't you buy down here? Just by that psychology, you should be buying down here at that point too. Right? Those people who were buying Nvidia at 100 plus before Trump did his tariffs last year should have been buying at 80. You know what I mean? It's a same buy. It's a better buy. So now we have a few price levels, and even on market, when I pull up ES, we can see either we can continue towards the upside from that going above 7,600, retesting it and going and continuing, or pullbacks to like 74.80s, 74.20s would be much lower, but 74.80s is that nice area where we previously broke over 90s. So even if we got some sort of push into here, which honestly isn't too far, guys, given that we do get these massive retests of key price areas on open, like we did here, from 44.50s to 48.60s, and then you got buyers jump in. I wouldn't be surprised if we got some sort of move like that where we continued, and then you got ES going towards the upside here, or again going off of like markets price scenarios that if we were just a continuation above would be good as well. As we've seen that happen several times on equities before on intraday, where if there is clear-cut optimism and there's not a lot of selling pressure in the markets, that buyers will just continue to rally given a small period of consolidation or just retracement. It's the minor, right? So you can see just boom, consolidating, buyers accumulate orders here in the lower time frame, and then the next rally, and then intraday period accumulates orders, next rally. So in this case, we don't get those 50 to 100 point retracements and pullbacks on market open. Not saying that can't happen. I'm just saying that the sentiment, and we talked about this, that stock market buyers are just so greedy that they will rally with anything, that they will rally if Trump says it's a beautiful day outside and it looks like a beautiful day for Iran to accept the deal, guess what? S&P is going to be above 7,600. And I'm not even kidding about that. That's just how the markets work. And the more you start to understand the picture, the more accurately you can predict it. And that's exactly how we talked about this move on Friday. Hey, if we get a pullback, buy that shit. Buy that shit on NASDAQ, buy that shit on ES, because that structure has shifted in the intraday time frame. And guess what? If you bought this on Friday and you left a runner, look at the beautiful position you'd be floating in right now because you understood fundamentals. Now, if you didn't do that, that's fine. Guess what? New week, amazing opportunities. Back to that crackhead bullish buying optimism that the stock market absolutely loves and thrives off of. So now it's time for us to attack this week and take advantage of this week's opportunities and use last week's results and our trades as lessons. So lessons in the case of, hey, we had a complete shift in structure for a week, but now we're back. We're back, baby. And we're back with that crackhead optimism that the stock market absolutely loves. Now, we're going to be paying attention to gold. We're going to be paying attention to ES as they develop throughout the week. One major thing is on Wednesday, we have the US interest rate decision. Now, if you know anything about financial markets, this is one of the key events that plays out 8 times a year. The FOMC, the Federal Open Market Committee, meets 8 times a year to discuss what they should do with the US interest rate. Not every meeting is a decision. Well, every meeting is a decision. Not every meeting do they decide to cut or hike. But the main point is that there's very key stuff being released on this meeting. It is called the SEP, S-E-P. It stands for Summary of Economic Projections. And this is where we will get data on what the Fed forecasts inflation, economic unemployment rate, as well as what they forecast near-term rates to be at. So that's where you see people talk about the dot plot. If you've ever heard of that, or if you've heard of that term, what that essentially means is that what the Fed is forecasting the rates to be 6 months down the line, 9 months down the line, 12 months down the line. It's basically a good way to forecast on what the Fed is saying and how the markets will price that in. Exactly. It's a big one because it's Warsh and the Summary of Economic Projection. So now Warsh is coming in, and Warsh isn't coming in as Trump's puppet. And maybe he is, but time will tell. Warsh isn't coming in as Trump's puppet. He's coming in as Powell's successor. He's coming in as someone who's still going to listen to Big Papa Powell, because Big Papa Powell is still on the board. Big Papa Powell hasn't retired and hung up his shoes like Jordan and just walked away with $1 billion deal. Powell is still running things behind the scenes. Powell is like Barack Obama 6 presidencies after Obama. He's still running the shit. He still knows his politics. He still boys with all the other politicians. So Powell is still going to have influence on, because keep in mind, he was the Fed chairman for almost a whole decade. So with Powell being in there, Warsh isn't going to come out completely dovish and cause gold to start rallying all the way to 4,700. Warsh is going to maintain that hawkish policy and that hawkish stance, which is what we will have to keep in mind when we are breaking down FOMC, is that gold may just be bullish up until then. And then if Warsh comes, I almost said if Warsh comes out hawkish and starts swinging hawkish statements talking about, hey, we're in no rush to lower rates. We're no rush to lower rates. We're going to keep rates high, where we may even hike, given that inflation doesn't get tamed. So any of those statements are hawkish and could start building that positioning for gold on the higher time frame. And I'm not talking about just a complete sell-off. You have to keep in mind positioning can be built over a course of days, It could be built over a course of weeks. It's not up to us. It's not about timing the market. But when positioning is built and those institutions are one-sided on those positions, then you get that clean sort of movement. Not saying that this is what will happen, but you can see that how movements like this can take out and play out over a course of weeks. This is a great example. You had price consolidate here from May 6th in this range till May 14th, about 2 weeks of price action. And then you see push down towards the downside and continuation to lows. But some things like this can take weeks to play out. So although we may not see complete selling take place right away, you can now start to see that, hey, we are at this structural price point here where gold may see a bit of difficulty before we see continuation, either towards the upside or not, or start seeing a position being built towards a downside, right? So that now when we look at gold here, gold is still holding that bullish structure over here. This is a key area where we saw buyers jump back in overnight. You can see we had an initial reaction to this key price sensitivity area that we mapped out on GC as well, right over here. Now, if we start to see gold push up and sellers come in, that gives us ways to see price come down to our next pullback area. Now, if I pull up gold on market, I can see, okay, these are some of the areas we mapped out. Of course, there are some areas in between, and you can map those out on your own charts, like 4,300, 4,305 area. And then you have the lower ones, but you can start to see how this key price zone, technical price zone, is in the way of this fundamental bias right now. So that's why you also have the upside scenario that if we get that break towards the upside, retest, boom, clean buys. But if we don't, then you might get a pullback to these lower support areas where buyers are more likely to jump in. Remember that probability thinking, the probabilistic thinking. We're not looking to have absolutes. We're looking to think in terms of probabilities and align ourselves on the correct side of the market with good risk. So looking at some headlines that came in, oil hits 3 months lows as US, Iran reach peace deal to reopen Strait of Hormuz. Iran's Tasnim news agency says US forces must withdraw from region 30 days after final nuclear deal. So that's something to see whether that evolves into something bigger or not over the course of the next few weeks, whether there's a nuclear deal even signed, and whether troops withdraw. You know how hard it is for troops to withdraw, especially U.S. troops from a region. U.S. troops are still in Russia, Ukraine. U.S. troops were in Afghanistan for almost 30 years. They didn't withdraw until Biden's presidency. And remember that chaos? So these troops, there's about 15,000 U.S. troops in the Middle East right now. You know how long it's going to take all of them out. So this is where we use our thinking brains, and we don't take everything as legitimate. We like to take things in context to what's going on and how we have seen things play out historically. Now, historically, things don't get easily folded and packed away and ta-da, war is done. Historically, shit goes on, negotiations happen, long-lasting negotiations happen, signing of deals. After World War II, it took them months to sign the deals. So we still have a lot of time. There's nothing Seb said, in my opinion, market could sell the rumor, buy the news at gold at FOMC. The hawkish tilt has been priced in lately. Then we get a bigger outflow if data stays hot. Exactly. And that's the whole thing, right? Markets are constantly it's price stability happening. And there's always a specific catalyst that ends up pushing price to its next price point. In this case, like here, we're at lows. We've been pricing in that hawkish policy. We've been pricing in the escalation. Guess what comes in right at the lows? De-escalation, right? And that's the catalyst to drive price to its next high. In this case, whether it's a lower high or we break past this price point and then we continue towards the upside. So, Kevin, what do you have in mind?
On which one, man? Gold, oil,
everything, man. Give me your entire outlook in one sentence.
Well, one sentence. It's one sentence. I can't. But where oil's at right now, oil's at a 3-month low. We've been in this range. The war's been going on over 3 months now. Oil is back below 80 for the first time since April, right? Really since like March too. It's a tough read because we know this is the bottom of our range, and we know this has been when we've gotten the biggest headlines of things picking up for the worse in the war. Yeah. So now that we are getting these more bearish for oil headlines, more peace talks coming in, it can start making its way back lower. I wouldn't look for trades on oil myself today. Definitely S&P 500. I'll be looking for the 75.80 area. This was an area that held us support overnight. I like that 74.80. My issue with 74.80 is how far of a drop we would need for that. I feel like at that point, it's not unrealistic. Like you mentioned, it's not unrealistic. We've been getting 100, 200 point moves on the S&P 500. But if we were to try to make our way towards that 74.80, I'd probably be a bit more interested in finding a short position. Like Seb said about the whole buy the news and sell the rumor situation, just with the S&P 500, right? A lot of people, New York session opens, they're trading options. All they know is that the war's ending. This is a peace deal. I got to buy the S&P right now. Just for markets to be like, hold up, let me just take your bag real quick, and then we'll reverse.
Yeah.
So I'd want to see that bearish move off the open, give us a good S&P buy the dip opportunity.
Yeah.
Gold too, man. We're at an extreme on gold. It was a major wall since June 7th. And we're right back at it again.
That's a major wall for a week.
Yeah.
We're at price points we haven't seen since the last 4 days.
But
you know what I mean? Like the markets move so much that this is such a massive move on gold. This 2 years ago would have taken 5 months to happen. This sort of magnitude of a move. But now look at it. This happens in 3 days. It's June 14th, June 15th, and we're back to these. We've gone down $400. We've gone back up $400.
Yeah, huge swings. A lot of volatility in these markets.
Yeah, and that's why if you're not like paying attention to the underlying sentiment and how quickly it can shift, you can get caught up. You could be selling every single pullback on gold since Wednesday night, and you would have gotten your shit eaten up, right? But now, since we've been on the right side, we bought market open gold, and look at gold from market open has pushed up from 42.80s to 43.50s. That's a massive swing play just in a day as well. So when you know this sentiment is largely active and it's new, then you can just fully take that buy. Take that buy, brother. Don't hesitate. Just understand that when sentiment is fresh and it's active, you're going to get that clean movement and you're going to be able to take advantage of it. You don't have to guess it. You can literally take advantage of it in the moment. You got several opportunities here to buy. You had over 3 opportunities since market open. 1, 2, 3, 4 opportunities to buy at very key price points and key price areas and ride them all the way up to 44.50s. Of course, take profit earlier. Like this would be a great area. This is where I took my profit on these buys, was up here. And then that was it for me, because these were just such easy buys to ride, right? Like this was just a easy sentiment reading, understanding, hey, gold is bullish. The deal is apparently, looks like it's happening, apparently. So let me just ride the sentiment instead of holding my bias that the deal's not going to happen. You get what I mean? This is how you adapt. This is how you stay fluid. You know that video of Bruce Lee saying you have to be like water. And that's how you have to be in the markets too. You have to be fluid. Is that things can take place over here, but we didn't completely shift our sentiment here. We said, hey, if this area holds, we can see sellers come in. And we did see sellers come in from here. But buyers were strong. We closed the weekend off in the middle of this range. And then we had the peace deal. And guess what? We gapped up. So now you can see that shift in sentiment and where price can head up into. In this case, if we get breaks above here, breaks above 43.50s on the CFD gold, then you can see continuations or pullbacks, which are fine too, which would mean that then we reject this area, drop down into a better buy zone where we would then buy, right? And same thing with ES is that if we just see continuation from here and we see price maintaining above here, then guess what? That's a nice buy as well after market open. Or I would love to see my deeper pullback, which then, I'm going to buy it. I'm going to buy it, man. I'm going to buy it all. Yeah.
Total buy the dip opportunities today.
Total buy the dip opportunities. Yeah. So let's just watch. It's still early on into the session, very early into the week. Markets are just adjusting and reflecting what happened right before market open yesterday. So remember, this is still fresh and it's been just over 15 hours since we had confirmation, hey, the peace deal is probably going to get worked in. So things still have to be signed. Take it as it comes. Look at the key price areas. Understand that, hey, we've pushed up. Can we continue to push up into here? Yes, we can. But is it possible we get a pullback to a better buy area? Very possible as well. And there's always two sides of the coin, and you have to just see which side is heavier, which side are is the probabilities going to land on. In this case, I can see that ES is just sitting at above a major area. It can either pull back at open or continuation towards the upside. So I can look to take advantage over here. Okay. And now looking at something like crude oil. You can see oil over here is just sitting below our key level of like 84, 85 and that gap. But we do have a structural level here at around 79 and even lower around 76. Now, oil, this is still oil in the war prices, right? Oil pre-war price, it sits at a band at about 60s and 50s dollars a barrel. Now, since we're not there, we're still the tensions are still hot. They're still ready to be priced in if things escalate, right? So as long as oil remains here, because you'll know when there's a massive de-escalation, we'll get a play like this where shit just gets absolute outflowed. This gap isn't much compared to what we've previously seen when there's massive de-escalation. And one of the reasons for that is oil isn't that high, so it's not going to get that much outflow, but it could just trickle out over time. And that's why we got to be a bit more careful here, because this is at a price point where oil is very sensitive at. So if there was any sort of escalation or any sort of reports over the course of the week or two that, hey, that peace is not happening, guess what's going to happen to oil? Oil is going to bounce its way back up into 80s, right? And that's your indication of, hey, that's a bit more risk-off situation that's going on right now. There's not a lot of risk on going on. And then what that would look like on equities, you just get like some sort of intraday pullback that eventually gets faded out on the next headline that talks about a peace deal, because stock market buyers are so much more optimistic than these other markets are, right? And then what that looks like on gold is that gold will then continue to build towards a downside, given we have hotter data as well that supports a tighter policy as well as escalations, right? Otherwise, if the war was truly over, and then we would just be switching into our buy bias. And what that looks like in terms of that buy bias, what that ends up looking like is, hey, you just had the exactly as we rode these sells for the past 3 months, you would then be riding the buys in a similar manner, where you have these intraday pullbacks, you build your position, you ride it up, right? And next thing you know, we end up coming right back to this price point, because the markets price an end of the war. They start pricing in rate cut expectations, and gold thrives better, less inflation, and boom, gold makes its way back up, because that's the story that the markets would be focusing on. That's not the story completely right now, but you can see that there's catalysts happening that are actively adding or taking away from certain biases. And that's why you see in market what supports it and what could flip it, because there's always two sides of the coin. And if you're only paying attention to one side of the coin, now imagine if we were only paying attention to the short, we wouldn't have been capitalizing on the bias. Right. We would have been so short-sighted that we would have taken losses. We would have taken multiple losses. Now, we don't want that. We want to be on the right side of the market. Now, how do you get on the right side of the market? Again, it's by thinking in terms of probabilities and fundamentals. Now, when you introduce fundamentals, it's so easy. Like, I look at the bias on a day. It doesn't matter if I'm an ICT trader. I was having a conversation with one of the biggest ICT traders in the space. He owns one of the biggest ICT accounts on Twitter. It's called ICT Concepts. If you have Twitter, you've probably seen it. He's ICT's right-hand man. They're good friends. But we were talking about it that, hey, everybody can trade however they want. There's no right, wrong way. But one thing that's objectively correct is the story that's playing out behind the scenes. What's happening in the gold market, what's actually impacting it, and that's going to hold out and hold weight and actually move the market in the direction it's positioned for. And then you have your traders who are going to take advantage technically, whether you're buying a 1 minute breakout towards the upside, or you're buying a pullback, or your fair value gap, however you trade it, supply and demand, ICD, whatever, trend lines, magic boxes, I don't care. Fundamentals is the backstory behind it that powers your market, and then you use it for your entry. Then you use your entry model to take the position. So objectively, that story remains the same across any market you trade. Things that are impacting gold are impacting ES, are the same things that are impacting oil. So now imagine I start to ignore that and I don't notice that markets are completely shifting and I have all this massive price movement that I failed to take advantage of. I don't want that. I want to be on the right side. I want to be eating. I want to be munching on the profits I'm making. And for that, we need to be locked in. We need to be making sure that we're paying attention to every escalation that happens and takes place. And that when we come to the charts, we're not confused or we're not overwhelmed by the mass amounts of information that goes on. It's as easy as, hey, I don't have to scroll the headline feed. What I can do is keep my tab on the breaking news over here and just pay attention to whether a flip watch comes in. And you'll know when a flip watch comes in because you'll see the UI and it'll be very easy to tell, hey, things might be flipping. We just had an event. This might be holding more weight. So what you'll want to do is manage your risk accordingly or look to see where you can exit your position. But currently, sentiment's clear as day right now. Sentiment's clear as day on equities. Give or take minor pullbacks. We'll see how market opens in about 34 minutes. And on gold is, again, at that key structural area. And I'm not in anything right now. And I'm not looking to take anything until we get a bit more price information in this session. Now, if we push a bit higher, remember that we push a bit higher into the zone. If we don't break it, we get that immediate rejection. We can make our way down to like 4,300s for an intraday pullback. But that doesn't shift us out of that structure, does it? It just further keeps us more bullish. If buyers were to come in here, then you'd see price head back into here. So that's our probabilities and scenarios mapped out. Now we got to wait. Now we got to wait and see what happens as we dig into the better half of the New York session. Right now on gold, we are just seeing this price sensitivity and price movement back into this zone, showing that, hey, structure is still holding. Buyers are still dominating in New York right now. And that breaks into here are going to possibly lead us deeper into here. What I would not recommend doing is looking for buys going into this zone, because my friends, that would be very stupid if you are looking to buy after gold has pulled back from lows here. You would want to buy when there's a pullback. That scenarios we're talking about on market, where you get these pullbacks, whether it's at 4,300 that I have mapped up over here, right? That I have mapped up right here, or whether it's at a bit lower at 4,250s. All I care about is I want to take that range, that higher probability trade. My higher probability trade isn't buying here after price has pushed up since market open, and now we're sitting at 1,500 pips higher. No, that's not where I want to buy, right? I want to buy when market comes back down to a known support area such as this one, and then I see price action kind of consolidating or shifting in structure, and then I can take those buys. And guess what? It doesn't happen instant either. It goes, there's time. It takes time for the sellers to get absorbed, buyers start coming in, and then you see that technicals get played out something like this. But that doesn't mean that sellers are dominant and that bias is now shifting. It just means that, hey, in the short term, we're going to see some pullback, and that's expected because the markets don't move one-sided. And that's the same as ES, that if we came back below 75, this area doesn't mean we're bearish. It just means we're just pulling back and just calm down. Watch and see where buyers jump in. Watch and see where that position is being built. Or that other thing happens where this little consolidation that's taking place here, where you have this little consolidation, just absolutely gets breakout above. You get a quick retest and then continuation above. And guess what scenario plays out in that case? This one, where you buy, we get that breakout above, retest, continuation above, because that sentiment's so strong in equities. But if we didn't get that and we got failures to continue, come back below here, then we're getting that retracement before buyers jump back in. And there you go. You got that scenario on ES mapped out as well. And similar on NQ, right? Because they move the same. So what we're watching on gold, ES, and NQ, Kevin, is there anything on your side that you want to share?
Yeah, if you want to cover some S&P, some NASDAQ, go over some levels.
Yeah, absolutely. Let's see it.
Let's get it.
Oh, it took me off.
I took the wrong screen off. Get out of here, no
Strike one for the week.
And then after, I know somebody was bugging about GBP. If you don't mind covering that afterwards. So S&P 500, right? We're looking to buy dip opportunities. We are not looking to fight this trend. We know that we were more bearish before, right? We had that NFP gave us a very strong move to the downside. We followed suit. Markets completely flipped back bullish. SpaceX IPO, other headlines, of course, the peace headlines. So zooming into where we are today, I would love to find a buy the dip opportunity and see if we can continue on this bull trend. We see that even on the 15-minute time frame since markets have opened, we've been creating higher high, higher low, higher high, higher low. Like the trend is our friend, right, guys? And that trend is still currently here in the market. So why would we want to try to, oh, this has to be the high, I have to short this?
Yeah.
No, we just follow the trend until then. And guess what? If we pull back, the deeper the pullback, the better the buying opportunity.
The buying for us. Yeah, exactly.
That's it. Don't buy the highs. We see that if people buy the highs, they have to hold through a full pullback, and they most likely are not doing that. They're getting stopped out and trying again on another breakout. So S&P, I'm looking for at the moment 75.80. If we dip below 75.75, like Nalab said, I'm not jumping in short right away, but I would be interested in seeing a reaction of 75.40. That's where markets opened. We had that gap up from Friday until Sunday, about a 43-point gap. I know a lot of retail mindset is, oh, if we get into this gap right here, I'm going to short it for a gap fill.
Yeah.
Not always the case, guys. When we have these gaps in markets, we have to see this empty space as missed market opportunities. No volume was transacted there. Nobody was given the opportunity to buy or sell within this range. So what happens? We have all these unfilled orders. Markets come back to this area. Those orders start filling. We get a reaction. So instead of filling the gap, we use this area as some sort of support. So trade setup one would be a more recent long position, and this trade setup number one might be supported too by SpaceX. This is going to be the second day SpaceX is trading, the first full day SpaceX is trading, and it's got a lot of hype around it. I know I mentioned last week in going into the SpaceX IPO that I think it's a huge retail grab. I still do. I just don't think it's going to happen immediately. I think we're going to get a bit of a bull move. The people who had the same mindset as me, that were like, oh, SpaceX, we're going to, let me get that up here, SPCX. Yeah. Oh, we're bearish. Oh, no, wow, we went bullish right away. Now I got to buy it. Like, no, let it.
You don't gotta do anything, buddy. Let it be.
Yeah, let it be, man. Let it be. It's at one. If you weren't buying it at 150, why are you buying it at 170? Why are you buying it at 180? I like the meme. Everybody wants to buy Bitcoin when it breaks 120, but nobody wants to buy it when it breaks back below 60.
Yeah, that's so true. That's so true, man. Everybody wants to buy Tesla when it's near 500, but nobody wants to buy it when it's at 300.
Yep.
It is complete a mind game for retail crowd. And it's that I don't get that understanding either. Where it's like you bought Tesla at 400, hoping to hold it for the next 5 years, but as soon as it hits 380, you're looking to sell.
That's crazy.
You know what I mean? It's like there needs to be that conviction. You shouldn't be playing with money that you can't afford to lose.
That's right.
We've all done it. You only learn the lesson the hard way. When you're playing with money that you can't afford to lose and you lose it, you're like, ah, shit, man.
Oops.
Wish I didn't lose that,
Yep.
Or you make money all week, you take a trade on Friday and you tilt and you're like, shit. Shit, man. There goes that hard work. And you don't want to be in that sort of position.
Yep, exactly. Even gold too, right? Same looking concept of the pre-market as S&P and NASDAQ. Higher highs, higher lows. Still bullish. Does not mean we want to buy the highs. Buying the highs, whether you're on a 5-minute chart, a daily chart, is never going to work in your favor.
Yes, absolutely. Great analysis.
43.30 would be nice for like a higher low to form there.
Yeah, 100% agree. That is a beautiful area as well.
Hold that, make some higher highs. And again, just short term. The dollar, I saw the dollar, we rejected an area that has been here for longer than a week. This one has been here for about, let's see, over a year.
Yeah, over a year.
So and we have the $1, $100 mark, 100 to 60 cents. It rejected it beautifully on Thursday. That's also when gold sort of started to find its footing.
Its footing, yeah. Wednesday night, Thursday, Thursday into the new day.
Yep. So it's like, where does gold, the dollar, want to go to? If we could get a clear trend on the dollar to the downside, that'd be great. What we can do, guys, you don't have to be so zoomed in on these charts. You could add an alert. Let's add an alert over here on the dollar. And now we could go look at gold. And if the dollar does start breaking lower with strength, we'll be aware of it. Yeah, I'd rather tilt on Friday than Monday, though. Bro, why? So Friday you could give everything back? No way. No tilting, period, man. That's what market is for.
Honestly, that there's a bit of an ounce of truth in that. Where
Yeah,
I'd rather tilt on a Friday than a Monday. If you tilt on a Monday, man, that's just like depressing. Like the week didn't even start and you tilted. But it's like Friday, you had some fun, you're back and forth, and then you tilt. It's like, oh man, I kind of agree with that. But yeah, I agree with what Kevin said. No tilting, like no tilt.
Bro, no
Tilt.
Bro,
Yeah, you're cooked if you tilt on a Monday, but if you do tilt on a Friday, man, it's okay. It's time to reflect on the mistakes you made and come back next week.
Yeah, but then, Seb, you tilt on Friday, you lose Monday through Thursday's profits, you go into the weekend looking for a fight.
Yeah, that's it. Game over for you, buddy.
Yep. It's road rage going crazy. You're just like, oh, you stopped me out.
Yeah.
Fed guys, FOMC this Wednesday. Don't forget, we will be hosting another episode of Market in the Morning for that FOMC event from 2 to 3. We will be live.
Yeah, that's gonna be fun. Gold. I would like to just go over gold as we were talking about. Hey, we could get the pullback from this area. It seems like that's what we're gonna. Looks like it's for what price is setting up for. That maybe going into New York Stock Exchange Open, that we just pull back down to a better demand area that we talked about previously. In this case, being this previous buying area that we had buyers jump in during London market hours. So when London markets open at around 3 a.m. Eastern, we had buyers accumulate orders over here. And what that looks like in the lower time frame is just straight price accumulation. That price created a high after pushing up in Asian. You get that retracement. You get price exhausts at an area, can't get passed through. Sellers jump in, drive price lower, buyers take profit, and then you also see buyers jump back in at this key demand area. So if we start seeing something similar happen, you know that this would be a good area for buying, as we've seen previous buying happen just the session before this one. Trump on Iran says oil ships moving safely through Strait of Hormuz on southern route. Ships are moving through Strait, many loaded up with oil out of the Strait of Hormuz. So you can see we have optimistic headlines that are coming through here, and that is causing that lower time frame just quick push on gold as well right here. But just keep in mind this price point, if it holds, then that could cause that pullback. But that pullback doesn't shift that bias, right? Doesn't shift that bias because headlines like this are holding the most weight. All it would do is just provide opportunities for that pullback, right? And even on gold, like that sort of liquidation from these highs would just provide more buying opportunities as that bias remains intact. So one thing to keep in mind when you are observing price action that goes against the trend, and you want to be aligned with it, right? So you don't have to look for sells here. You can, if you have the conviction and you've been looking at this level, you can 100% take those if they present in the lower time frame and then follow some sort of suit like this. Have your targets down here. But if that doesn't happen, then just wait to see how gold reacts as it digs deeper into this price sensitivity area. And that's what I'll be watching for, is how does it react as it digs deeper into there.
All right. We're getting some begging in the comments for GBP USD. I feel bad. If you don't mind covering it just briefly with Mark, just to give him some levels.
Because they said please. And please stop spamming when you're asking for something.
Or if everybody wants to spam, that might help the algo.
Yeah, it'll help the algo, but it'll get you banned.
Yeah.
Market moderators don't be. The guy's in deep drawdown. That's what somebody said.
Yeah.
Nah, deep drawdown Monday, horrible. Nah, but so
Friday.
GBP USD. So GBP USD, and this is not a market I trade often, but we will go through it right now, and we'll go through it with the help of market as well. So I'll open up GBP USD. Do I have it up here? All right. So with GBP USD, it's either the UK over here. We have a UK CPI miss, stronger US data potential, and the residual Middle Eastern risk are what's keeping it a bit more bearish, right? So we have seen that over the course of the past few days, when I pull up the dollar chart And that's what you have to watch when you're trading these dollar pairs. Where did my dollar futures go? So when I pull up the dollar index, dollar, since tapping into these highs over here, has gone that relief that also started same time Kevin's talking about on Thursday. Same time gold bottomed out, same time ES got that pump. On Thursday, we got dollar becoming a bit more softer as the peace deal was becoming more and more likely to happen. So what this does is that this creates that outflows from dollars, more inflows into gold, gold holding more bullish, and then also more inflows into GBP USD and any dollar denominated pair. So if you understand that, then you know that from Thursday, from last Friday and last week, that when that move happened and Trump came out and you got dollar becoming weaker, that any subsequent pullback on a dollar market is going to get bought up, right? You have your buying pressure come in after Trump. I'm not saying trade that day, but if you look at the next intraday period, which is going into London session where GBP USD moves a lot, you got a dip buying opportunity here. Even in New York on Friday, you got that buying opportunity. And guess what? When markets open, GBP USD also rallied because dollar was also getting that correction from market open and dollar had gapped down. So now when you understand this and you understand that where it could go off, then you can start to position yourself in the lower time frame to ride this up to more logical areas where you might see sellers jump back in, given that that dollar weakness fades out, right? And then that just drives price to a better buy area if that sentiment continues holding. So you can see that largely we've been bearish like over the past intraday or the past month on GBP USD, where we got the high created, lower highs, and we keep retesting these lows. If we're unable to now break past these lows, past these highs, guess what? We're going to be maintaining in that area, in that zone, until some sort of catalyst drives GBP USD higher and drives dollar continuously lower. So unless we're getting that, if we continue to get hotter data, then you're going to see dollar continue to get those inflows and head towards the upside. And you'll also see GBP USD head towards the downside. And that's why market bias hasn't really shifted, because dollar isn't fully out of its bullish structure that it's been holding since start of the year, right? Since February, since basically the war. So you got that structure, especially since the start of May too. We've maintained this bullish structure. Now, if we start seeing this shifting, which could take a while, could take a few intraday periods, then you would get that confirmation, okay, yeah, we're getting a weaker dollar, and that could mean that GBP USD continues towards the upside and reaches this sort of price handle. So that's what you need to pay attention to, is look at how dollar is behaving with the war, with the peace talks. You can clearly see the outflows on the dollar that started on Thursday with Trump coming out and then continued over the market. So now if we start to see plays where GBP USD comes down here and takes out these structural lows, guess what? Guess what you should be looking out for, brother? You should be looking out for those sells in this case. But that would also need to be accompanied. In dollar, if dollar starts doing this, you should look for the buys in GBP USD. But if dollar maintains its bullish upside and it holds above these highs and it continues on its pathway towards upside, then that would have that opposite impact on GBP USD. So yeah, looks like bro put the house on the line. But yeah, so getting back to, hopefully that analysis cleared it up for you and what you should be looking out for and what you need to pay attention to. So gold, again, is just pushing into this area. Nothing yet, guys. Keep in mind, there's been nothing yet that we've taken advantage of besides the buys from here, which in my eyes, perfect. I'm content. I'm happy. That's my trade for the day. I'm not looking to force anything. I'm not looking to take things that are out of my routine. I'm not looking to go against the market. I'm going to let the market do its thing. And when it does its thing and it sets up, I'm going to be there ready to attack. And that's what we're watching out for. We still have 15 minutes till NYSE open, that cash open. And then on gold, all we're watching out for is seeing how do we react to this key price sensitivity area. Remember, this is that sell that we caught last week. For all you market OGs and Market in the Morning viewers, loyal viewers, you know that we called out this sell on stream and it ran for 3,000 pips, 3,000 points on gold. Now, I didn't see anybody else calling this sell. People were calling out buys, but we called this out. And now we're right back at that same price point where we saw that seller jump in here. Now, How is gold going to react as we push deeper into here? Only time will tell. Maybe we don't get this downside scenario in the short term that can align us for better buys. Maybe we just get a movement like this, where gold actually ends up pushing higher and breaks above this. Let's say it breaks above this, right? What I would do next is then I would wait for the intraday period to do a pullback to see where buyers are going to jump in. Or if it pulls up into here, like let's say over here, that tells me, okay, this area, boom, got taken out. There's no sellers here. Sellers are gone. Sellers are gone from here. They're somewhere else, but they ain't here. So what am I going to do now is I'm going to wait for that pullback so I can then do the safer buy going into maybe tomorrow or later into this session or Asian session. But the point being that I'm not buying into this supply area when it's still active. I would be buying once I'm confirmed the structure has broken, that there is no seller there, that I can now focus, excuse me, on taking buys above this area. Does that make sense?
Absolutely, bro.
Now, but if the other hand of this, if we started seeing that rejection and that price point wasn't breaking, and then you see breaks of this low, right, that could mean that price would then merely head its way down for this sort of scenario to play out. But until we get something like that, either we continue towards the upside, which I'm not going to take anything until we break past here and we get that retracement, or if we get that downside scenario, you could take those quick scalp sells in order to target a low like this. And as well as because that kind of gives you good confirmation since you are sitting at a very clean supply supply zone.
Yep, definitely. The fact too that we are moving higher, but we are coming into resistance points is just another strong reminder that even though, we want to be buying with the trend, we don't want to be buying the highs. We don't want to be buying the breakouts.
Yes, sir. Yeah, absolutely. You don't want to be doing that because from the day you started trading the financial markets, think about it. The number one thing you're always told was buy the low and sell the high. No one ever told you to buy high and sell low. That is just what the retail ends up doing, and that ends up being the bottom burner of the market. Like, they end up selling here, they end up shorting here. Think about how many retirement fund managers do you think fucked up selling the low and selling their retirement here? Or just overall people who were investing for so long with their company in their 401ks and then absolutely got scared when this was happening because their advisor told them, hey, things are looking bad. And then the stock market does what the stock market does. And it's again doing the same thing. So you don't want to be on that side of the coin where you get short-sighted when a move like this is happening. Right? You want to be on the side where you're aligned in catching these swings like we are, where you're taking advantage of the fundamentals that are ongoing in the financial markets and absolutely riding the massive swing plays that take place. I don't want to be, at the end of the day, when I tell people I have a tech company and I'm a day trader, I tell them with confidence because I understand the market. And then if they ask me any questions, I know the answer to it. I know what's happening in macroeconomics and geopolitics and how that impacts any market. You could talk to me about Indian stock, about any stocks, any market, Korean stock market. I'll be able to tell you how it breaks, how all of this trickles down to that economy. Now, I would hate to be that guy when somebody asks, what do you do for a living? Oh, I take 10 points off open range breakout.
It's like, I take 1-to-1 scalps with the orb.
What did you just say to me? Like, what? Any professional will be like, bro, what market are you trading? What is that? What IFBG? What is that?
Are you sure?
Yeah. Like, do you not know what CPI is? What monetary policy is? How does that play into effect? So, right, we are approaching that market open. We got 11 minutes. Again, as we mentioned, either we get that pullback or guess what? Or guess what we were going to get? We were going to get that sort of price action where you see that push up, retest, continuation above. So that just that continuation play, which I also highlighted, happens more often than not when the markets are running off of clear sentiment. Like right here, you had these periods of minor intraday consolidation and then push towards the upside that carried on for the next intraday period, retracement, and continuation towards the upside. So that looks like exactly what's happening here, where we are just continuing to push in this accumulation, lower time frame accumulation. And if we can just continue to break above this high over here, in this case, I hate how zoomed in this got now. Continue to break. Guess what? We're heading back to all-time highs,
Yeah.
right? Slowly but surely, guess what? We're back all-time highs, and it took us a week to get down. It took us 3 days to get back up.
That's right. Absolutely right.
Yeah, so we're
It's
pushing
always
deeper into here. 55s, 63 is like the top of the wick, and then if we got a complete break of it coming back into the next intraday period, you get that high printed. If when you get that pullback, that's when you buy. Whether it's on this stream or not, that's when you're going to buy. Or if we see sellers come in from this supply area and drive price down, this is the next area where you could be looking to buy 4300s, 4275, and even this gap, close of this gap. But take it the levels as they come.
That's right. That's right. Don't force anything. Don't be impatient and be like, oh, markets are moving without me. Markets are always moving.
Yeah, markets are always moving, dude. Like think about the people who were buying gold every single intraday pullback here. And
We're
then
having
absolutely
breakout.
faded, right?
Imagine.
And you guys have seen it. Like there are people in market in the morning coming in the comments being like, why aren't you guys buying gold? And they've been doing that for the past 3 months. It's like, does that look like a buy trend to you? Right? Level by level, day by day, headline by headline,
Yep.
key factor by key factor on what's supporting the buys, flip watch by flip watch,
Data
candle by
by
candle, trade by trade, whatever you want to say it. So the point is that you remain level-headed. You don't come to the markets absolutely in a fucking panic.
Yep.
That you don't want to be in that situation. I've been in that place where I come to the markets. What's going on? What's going on over here? You know what I mean? Absolutely confused. They come to the markets with confidence. Maintain that confidence throughout the trading session. Don't let it go just because. Let's say you took a gold buy. Let's say I took a gold buy here. I got stopped. I got taken out at break even. And then the market goes, and I'm like, fuck, man, I was so right. What happened? Why didn't I? Guess what? Instead of doing moping about it, why don't you just look for the next buy?
Yeah.
Which happened a few hours after. Wow. Which literally happened 6 hours after. So look for that new buy, man. Stop crying about it. Stop crying about a loss. Guess what? You got taken out of a sell that you attempted. I attempted a sell here. Guess what? I got break even on it. It played out. Fuck it. Whatever. And guess what ended up happening? I caught a buy trade because sentiment shifted over the weekend, which made me more money than I was floating on that sell trade, on that short over here. So who really won? So you know what I mean? So when I look at it from that point of view is, hey, I can always be on the right side of the market if I just wait for the correct setup. If I understand, hey, I'm not going to buy into this zone because of the low probability that that buy continues, especially if we've been buying since open. Is that my buys were better overnight, but what I can do instead is patiently wait, because if market comes to my buy zone, guess what I'm going to do? I'm going to snipe it. I'm going to snipe it, and I'm going to make sure that I'm aligned on the right side of the macro bias. I'm understanding what's supporting this bias right now, but just as much I understand that, hey, a few headlines could flip it, and I need to watch out for flip watch over here. Now, while I'm doing that and I'm managing my trade, I'm watching the markets, I understand, hey, if we start closing below here, guess what? We're going to get those sellers jump in, and they might drive price down to this low, where then I'll look to buy and see how price reacts here. Until then, I'm going to sit on my hands, because for all I know, buyers actually hold above 43.50s, drive price higher, and actually end up playing the other scenario, for which we'll look for those buys when we get that high printed and we retrace into this area. Because we know the market loves to move in waves. The market doesn't just always move up. Market doesn't always move down. It always moves in waves. But one thing for sure is that there is always a catalyst that drives price to where it needs to go. In this case, we're at lows. We saw buyers actively jumping in before Trump came out. Trump came out because technical buyers, sellers were exhausted. We had just seen the entirety of May and June leading up to it. We had seen sell-offs on gold, every pullback getting sold. So this was perfect for technical buyers to start jumping in, algorithms start triggering orders, and then you had Trump's catalyst bringing that inflows into gold, and bringing again inflows into gold over the weekend right before market open. So now that gives you a full picture of what is expected for this week as we go into FOMC. And really the positioning of the markets will be key as we go into FOMC. So we are here every day to break it down, to update you on what happened overnight. And we do this 2 to 3 hours a day, 5 days a week, 4 days a week, and even more when there's events like FOMC and interest rate decisions happening, because we're like, hey, traders need to be held their hands during events like that. Because I remember when it was my first rate decision and I was 20 years old in university, broke university student. I used to work folding clothes at Tommy Hilfiger. I used to make $11 an hour. And in my first FOMC, I blew my $200 trading account, randomly YOLOing it. I had no idea what an FOMC was. I just knew there was a red folder event on a Wednesday at 2 p.m. And at 2:30, some random guy started speaking and I had no idea and I blew my account. One single whipsaw and my account was blown, and it took me nearly 20 hours of folding t-shirts to make that money back. So when you think about it in that way, every dollar that we've made or given to the markets or made from the markets is very precious. I don't want to be spending 20 hours folding clothes just so I can get whipsawed in FOMC. I want to take that money and grow it, take that small amount and trade carefully with it, trade wise with it, and trade with fundamentals, right?
Yep.
It's not about staying away from red folder. It's about understanding what does this data report entail and how can the outcome impact the market I trade? Yeah, I blew away 21 hours, man. And that's not the first time. Before I even made a dime in the market, I lost nearly 70,000 Canadian dollars before I even made a single dime in the market. So, and the point being was I lost money chasing the markets, chasing technicals, not understanding what actually moves the markets. And then 3.5 years later of messing around like that, I finally sat down, realized, hey, I need to go through all data reports and look at how it makes sense. My co-founder started teaching me fundamentals, and guess what? Now I can read it as just as good as he can. I can take trades just as good as he can. I can hold the same conviction and hold my place for longer because I've practiced this, and practice makes perfect. I understand that trading with fundamentals used to take a while to integrate into your routine, into your strategy. But now when I go to market, I know the bias is bullish. I know exactly what's supporting it right now. I know the event scenarios that can play out because of this bias. And just because I see sellers coming in doesn't mean the bias is flipping. It just means we're aligning for one of the better scenarios. So now look at this. It's now easy to integrate into any strategy, regardless of who you are as a trader. You could be a scalper, an intraday trader. You know that if we start pulling back as a scalper, start watching these lower areas because that bias remains bullish. It does all the heavy lifting for you so that you're never coming to the markets and lost and confused like Dory when she lost, or Nemo getting lost and scared. You're not in the middle of an ocean fighting alone. You got market with you, the best market fundamental agent in existence. I'm telling you, there's no company who has built a better fundamental analysis AI harness than we have. And
Bro,
we have
not even close.
thousands of hours working on the actual backend tech to the point where you can try to replicate market. And people do try. I'm telling you, the amount of people I see trying to replicate market, and every single one of them have a market account. And they know who they are. Every single one of them has a market account. They all use market every single week. They all keep up to date. They all watch our stories. Keep watching.
We're watching it right now.
Enjoy the show. I hope it's entertaining. Are you not entertained? Are you not getting tired from the endless amount of work you have to keep up with because you guys put out a shitty feature and then you wake up Sunday morning, babe, the market team just dropped 10 more features. I can't. And your girl's telling you, give it up, babe. You can't keep up with them. That team is too good. Don't mess with them. Your girl's telling you, don't mess with the market guys because they're just too good.
Ain't your girl anymore.
With them. When your girlfriend's telling you that, you have to give it up, man. Just give it up. You will not be able to compete with the speed we're going. We're a team of nearly 20 individuals, hungry young men and women who are just destined to win here because all we do day in, day out is pay attention to financial markets, constantly update the platform we're working on. And no other company can say that. No other founder can say that. No other individual on any company's team can say that. Everybody on my team has the same authority I have. Everybody has the same opinion, same output, same value in what they say. A lot of the things you see here, I'm not even in charge of ideating this. This is all coming from a discussion that every single one of us have about the product daily and consistently. So To all those watching who copy market, who come out with a platform, try to build it for a month, and then they get tired because you guys don't have the resilience I was born with. God gave me this resilience. He looked at me and he's like, wow, this is going to be a special individual. I'm going to make him resilient as hell. That even if it took me 10 more years to become successful, guess what I'm going to be doing? I'm going to be up every day, 5 a.m. at the gym, coming back to the charts, grinding till 12 a.m. And then I'm going to go to sleep peaceful because I made my day amazing. I used my energy and put it exactly where I need it to be. I'm not out here on a yacht trying to copy market. I'm out here behind my desk 18 hours a day. And market's just open. We're getting that push towards the upside. And let's go. Great talk. So we mentioned it, that if we continuously held this area, it was going to look awfully lot like those consolidative conditions, which we previously talked about, is that you don't get that pullback. You just get those minor consolidations take place. Sorry, I'm just trying to find it. Where did it go? You get those minor consolidations taking place, and then you have those buyers jumping right in, like right over here, right? So this, you could see where we're now encountering this price area right here. And I just want to map this out because this is where we had pre-NFP positioning take place, right? This Thursday before NFP, and then this was NFP. So we're tapping into those types of price points. Now we need to break above here in order to push higher into all-time highs. Now, given, let's say we can't break this currently, what I would expect to happen is to get some sort of pullback to a better demand area where buyers can jump in, or a break above here would then just entail straight continuation to all-time highs, and then we'll observe and see how price reacts here. So this is what we can watch on ES in the current short term. Now, when I open up gold, when I open up market and I go to ES USD over here, I can see that there are deeper intraday scenarios which still validate the bullish bias. That just because if we pull down to Friday's price point doesn't mean we're bearish now. We're still bullish, and we're going to be looking for buys. So with all that information, I hope you guys are either in these positions from these lows from when we described that setup, where price may not continue to push or pull back, since sentiment is so overarchingly strong that we could just get these minor consolidations and push towards the upside. And we talked about this several times during this live session. So if you're new and joining right now, here is exactly the reason why we took the buys from these lows over here. So if you're riding these, beautiful. On gold, on the other hand, exactly how I was mentioning, don't try to sell this right now. You have to wait for those confirmation, because otherwise, if we hold above here, guess what happens? We have now just fully reached that wick high. Now, on the other hand, if gold continues this session, that perfectly paves the way for our next opportunity, which are those buys on that retracement. Now, even market told you we're bullish. We're going to get that continuation above. If we just get continuation above, we can push higher. Otherwise, expect a deeper pullback. And that's why we have these scenarios, guys, because it guides you. It shows you that even if we're pulling back, doesn't mean we're bearish. Just use it to buy. Use it as an opportunity to buy. And look at that. That's that opportunity to buy on gold. There is that opportunity to buy on ES, because that overarching sentiment was bullish on ES, on gold, because of the peace deal, reducing global geopolitical risk premium. Now, with all that information, guess who executed beautiful buys from down here? This guy. And so did you guys. A ton of you guys did too. I have people messaging me on Telegram. They caught the gold buys. They caught the S&P buys. And look at our targets now. This was our first target. Now, if we break above here, guess where we're heading? Back to all-time highs, back to prices that we haven't seen for the past 7 days. So beautiful, beautiful session. I hope everybody's having a great time. Drop a W in the chat. And man, yeah.
Bro, killer, man. Killer breakdown, killer starts of the week. This is how we do it, man. We don't start it on a tilt. We start it in the right direction. We
started on a win. You know, we started to the point where, you know, we're making fruitful living, where we're able to put food on the table for our loved ones. We're able to take care of people. We're able to pay the bills. And that's what matters. We don't care here about coming to the charts to buy a Lamborghini. I want to come so I can support those around me. I want to support those and be the rock for those around me, so that they don't have to stress, that I can take all the stress and execute in the market and put my energy into focus here. We're all going to be stressed. Every single one of us goes through stress every single day. My life's stressful. My life's constantly stressed. But I think that's everybody's life. That's what life is. Every trade you take, you get into it, you're a bit stressed. It's a loss. Oh well, man. Move on. Next thing. Life's still good. But imagine if it wasn't stressful. Imagine if trading was so easy. It just wouldn't have that flavor that life has. Life's flavor, that little wins, and then you get your ass kicked by life, and then you win again. And it's that flavor. You want that flavor in life. You want to be hitting those wins and losses because, hey, the pendulum swings both ways. It doesn't just swing right, it swings all the way left. And that's the same thing. It's that life's up and downs. If you're experiencing the highs, you're also going to eventually experience the lows. And the best mentality around that is to always know that there is a low coming around the corner, that bad times are always around the corner, but so are good times. That if you are in a bad place right now, good times are just as quickly around the corner as bad times were. So keep your head focused, day at a time, level by level, trade by trade. And that's what we're here by every single day. So now that we're seeing that continuation above, this should give you guys confidence in holding these S&P buys if we maintain above here going into all-time highs, which is what exactly I'll be doing, is that I'll be holding this from here into these all-time highs. And on gold, we can see we just had some minor reaction at the wick highs and at the highs of that sorry, I'm just going to clean up my chart here a bit and remove some of these arrows. But we had that wick retracement, and that doesn't mean necessarily anything. We're still bullish, right? Guys, you have to keep in mind, we're still bullish. And the scenario that's playing out right now is that we're just digging deeper, but also breaking above this price point, this price sensitivity area. Now, if we truly break it, now guess what? Now, eventually tomorrow or the following day, we'll have to do some sort of pullback where I can get into those buys. And then that's where I'm positioned. And I'm not rushing into buying at these highs because we don't do that. We don't do this monkey brains stuff. Humans have evolved for hundreds of thousands of years that we're not monkeys anymore, and we don't need to behave like that in the financial markets either. So I'll be waiting for that on gold. We also called out that, hey, if gold maintains above 43.50s, we can see that push above. But we don't recommend buying because you're buying into this high. And so what if gold pushed from here to here? I don't give a shit. Look how much gold has moved in the past like 3 days. And I'm going to show it on the 1 minute, or actually I'll show on the 5-minute chart. Look how much gold has moved in the past 3 days. Do you think I give a shit about this minor movement that happened in 5 minutes? No, man. I'm focused on the big pie. I'm focused on riding these to all-time highs and maybe beyond, depending on how we react here. But do I think we're going to break instantly? Nah, I don't think that. I think we may even just get some sort of take profit here. Buyers drive price back down to these intraday lows, and then we see some sort of price reactions like this. And we build that buying position so it drives deeper into the upside. Because remember, every time we break out into all-time highs, sometimes get some consolidation before the next rallying happens. And that's normal. That's just how markets move. So don't get too caught up in the fact that if you're in these buys and we're going to all-time highs, that it's just going to happen all of a sudden. No, like understand that, hey, we may get that pullback. Market actually may pull back to where my entry is, but I should be willing to either ride that out or take profit and then re-enter. So beautiful, beautiful plays, guys. I'm very, very happy with how things are playing, how markets are playing out to start the week. We have adapted perfectly to the change in sentiment, and that's what the markets are about. It's about adapting to information as it comes. You'll always hear me say, we need to wait for more information. Is that on gold? I said it first here. When we printed this low on Wednesday and Thursday, I told you we need to wait for more information here. That this is not enough information, that if we're going to drive higher, there's going to be a catalyst. And a few hours later, that catalyst was Trump saying there's a peace deal. And then again, peace deal catalyst. And now guess what? Gold is that continuing higher with that bias, right? With that gold bias, which market correctly adapted to and told you. As soon as a peace deal happened, I told you, market listens to every piece of information that comes in. That's the engine we've built. We call it the market brain. It is a living organism for us that reads every bit of information and data headline that comes in for the financial markets. And it adapts to it. It triggers all our workflows for trigger for all market. So how you can always see that when a headline comes in, it'll come in blank without any of this, without the tag, without the impact, without the breaking news, but instantly it's tagged because our market workflows and our market engine are always listening and working. It's constantly a living, breathing organism. If you want to think of it as that, it's it's artificial intelligence for macroeconomics. Is the most powerful fundamental harness built in the world on the fundamental analysis side of things. So we're seeing now is we got that push towards the upside. Now I want to paint the scenario. Let's say we don't get this clean cut push towards upside, and in fact we see price come back below here. Let's say you see some sort of price action like this, and you see buyers coming down. My position's in from here. Let's say I take a break even on this. Okay, now price pushes down here. Maybe price snaps back above now. This is where you start watching for buyers and seeing if price is going to shift in structure. Just because we get this outflow, or if we were to get it, doesn't mean that buyers are gone for the session. It just means, hey, this is a liquidity move. We're coming to get those buyers, and they're going to come in fast if this sort of movement was to happen. But if we maintain above here, then okay, all-time highs, here we come, is that we're going to continue to maintain above this price point. And if we maintain above this price point, then it's just much easier for price to continue and buyers to hold price above here and go to all-time highs. Otherwise, any pullback, we're just going to be buying, because that's what market told us. Market told us, hey, look for this or pull back and buy. Same on gold, opposite on oil. So this is the financial markets, ladies and gentlemen. It's a series of transactions that happen based off of real world events, real catalysts, economic data, geopolitical events, macroeconomic events, and all of this gets tied into and digested as price action. And that's what you see on your screen. That price action isn't a leading indicator. It's more so lags. Sentiment is leading. Sentiment tells you how institutions are positioned. Sentiment tells you, hey, we've seen a massive gap because of a peace deal that was just announced 26 minutes before market open. I'm going to adapt and look for buys because market adapted. Market showing us, hey, peace deal is holding much more weight right now than anything else. And that's what we adapted to, and that's why we made money.
Beautiful. Beautiful, man. Guys, what more do you want from a live stream, guys? Banger after banger. Guys, don't forget, get access to Market AI at marketedge.ai today. Leave us a like, leave us a subscribe, and of course, don't forget to leave us a review on Trustpilot, trustpilot.com/review/marketedge.ai.
Yeah. Another thing I want to mention is that install our TradingView extension, guys. If you are a market user, and Kevin, if you mind dropping that link in the chat, if you're a market user, you can go to our updates tab over here on my screen, and you can see that we added a new Chrome extension to market. And here's the link. So you can actually click 10 seconds to set up. I click this. Guess where it takes me? It takes me to the Chrome web store, which I'll drop the link here right now. You can see 133 people have already started using it. They use this daily. And I'm going to drop the link for Kevin in our private chat, and he'll be able to send that to you guys. Takes 10 seconds to set up. You just install it. You come to market. You come to TradingView. It's already here. And then you click it, and you get logged in instantly, and boom, you're a part of the trading. And now you have market, you have the live calendar, you have everything that's going to open right directly on TradingView. You have breaking news, everything works just like how it does on market. So take advantage of this, that if you trade futures, and since right now we have delayed futures data, and we do have live data coming very soon, but since we have the delayed data right now, you can always use TradingView and market together by opening up ES over here and having your market widget completely open. So as we watch price action continuously develop here, let's see how this plays out, whether we maintain above 76.04.05, or if we continue down, then we'll just take advantage of the lower buy opportunities wherever that ends up happening and whenever stock market buyers come in, right? So if we maintain above here, then here's that quick jab you could do towards the market once it's aligned, and then you would just be riding this momentum towards the upside, where it would be like tight stop losses, but you would also have like a 1 to 3 risk reward in this case. But this would be a bit more of a later buy. And again, you're more like B type setup rather than your A type setup, right? If I'm looking at setups right now, as we were going to that session and we were calling out the buys here, this is more of like your A setup. It's not your A plus, because your A plus would come with something like if you got a pullback, right? Now there's a bigger range towards upside. Now that's your A plus level setup. We just took like an A level setup because we understood that, hey, maybe we don't get that full pullback, because when sentiment is fresh and active, we can just see continuations after minor retracements and consolidations. So that's what we got here. And in that case, this was an A level setup. And now this would be your B level setup if you guys wanted to take this sort of move, as we were talking about, if we hold above here, which also makes sense because that's holding above this support after we have had buyers clearly in control after New York's stock exchange open, and this could just dig us deeper into these all-time highs. Now, do you see the picture I just painted from bias to entry to secondary entry, how this setup is lesser probability, so you should risk less since this is the main setup? Or if some reason, for some way, price comes back below this and then starts going lower, I'm going to look for buys down here because this is still a key buy zone, either here or wherever price pulls back lower. Because as Kevin was also mentioning, that if you're looking for buys, the lower it goes, the higher the probability the buyers jump in. It's a better price. Buying bananas for $5 a bunch is not as good as buying it for $2.50 a bunch. That's a 50% discount, right? So that's much better. So that's exactly what we're gonna do. But clean trades, guys, on ES, on gold. We didn't call anything out besides just painting the pathway of price that can follow. Market already broke down for you that on gold, you could be looking for that break and retest towards this, which is what has been playing out. So yeah, don't rush to buy ES or gold now. Rush to buy. I love that, man. Thank you so much for your support. It always means a lot. I always see friendly faces and names in the comments on Instagram, on support chats. Like you all really do make the platform so much better. Every bit of information, feedback, or even negative feedback, we take it all as constructive. Like we improve off the platform. But if you're gonna leave us some, let's say, bad review or negative feedback, please at least tell us where we can improve or where we went wrong. Because just saying this is shit isn't going to help improve it. And you're probably just saying that because you spent your last $50 on a market subscription you couldn't afford. So don't get mad at us. Earn more money.
Make the right financial decisions.
Make the right financial decisions. And honestly, if you just came to us and were like, hey, man, this isn't a platform for me. I bought this a few days ago. Can I get a refund? I'd be like, for sure, man. Of course, we understand. We're not dickheads, right? We're like, we're good people. But if you just leave a bad review without telling us where we can improve, that's not really pushing the gun anywhere, you know? So we're always open to constructive feedback. And that's what made Market into the platform it is today. That this platform was completely different a year ago. And now when I look at it, I'm like, wow, this is because users told us what needed to be improved, where we needed to fix the flow, where we needed to bring more value. And guys, beautiful plays on ES, huh? Even this trade is even playing out perfectly.
Bro, people are, Nalab, this is the second stream people are asking for that market IPO. We're going to have to go public soon.
And you guys are going to see me disappear before market ever goes public. I'm going to stay under the radar. I'm not in it to become famous. I don't care about being an influencer. I'm just here to do. I love this, man. I love that we have a community that watches us daily. We get to call out trades. I get to build my dream software company and platform and work with some of my best friends like Kevin, like Jeev, everybody behind the scenes, Imri and all these guys. We're all brotherhoods. This is all family, right? And that's what I love. So we're not going to IPO, guys. You missed it. Only the team gets the benefit from this.
Yeah.
You just get the value and the wins and preventing you from losses.
No, guys, ES coming up towards that 76.20 area was a price target I had from this morning. Price just shot straight up since the market opened, 7,600 to 76.20. Like we mentioned, we're probably on our way towards those all-time highs. We had the big events. We had the peace deal coming out. Now they have 60 days to completely sign the peace deal. So again, it's not completely over, but the optimism from those headlines over the weekend are clearly driving price with strength.
Correct. Yeah. Yeah.
When
Yeah.
asked about gold shorts, we are not shorting gold. You better rewind and start this episode over.
You gotta rewind, restart it, look at what the biases are, what's holding the bias. We've
Yep.
talked about it actually like 7 times in this live stream on why we aren't looking for shorts at this price point. And even if we were to get those lower time frame price pullback on what that would, I'm just gonna quickly control Z my way to my, yeah. If we were to get that, that's what we'd be looking for, is to align ourselves with buys if those shorts come in and they drive price lower. Otherwise, what we are looking for is some sort of price structure that plays out like this if we were to push higher. Otherwise, if we come back below, short-term sells down to here, where you'll see sellers drive price down to a better buy area, and then it's wait and see to see how buyers react here or up here. So that's for quick summary on gold. ES, man, beautiful, beautiful plays. When ES has that clean upside and we're trending nice, that sentiment is holding great weight, it's going to be a much smoother ride towards all-time highs.
Yes, sir. Yes, sir. These markets are clean right now, man. Just clean run up. And it's crazy because what I love about these markets too is it's a great example of how we should not marry a bias, right? We talk about marrying a bias being like last week before that, we were just shorting every rip on gold. We just kept fading it and it played out. Kept fading, it played out. We got new headlines, fundamentals started to shift. We're not blind to that. We're not married to our bias. We're using market to gain that edge and see that insight in real time, and we're able to flip.
Yeah. Kevin, quick question for you. I always get confused by this.
Yeah.
Am I supposed to have the B adjusted on here right now?
So yeah, be adjust on, and it's a little funky because then all of your drawings will shift because what you'll have to do, let me see. Let me share my chart for a
Yeah.
moment and I'll
No.
show you a little trick. I know TradingView is funny with that. So let's see. Delete. So be adjust. When you have be adjust on, it basically means you could use this one NQ1 chart instead of doing like NQM 2026.
Yeah.
But when you do be adjust, instead of getting that big gap we get when we get that rollover, this is just a gap from the actual headline.
Headline. Yeah, but that gap on the rollover isn't there,
Yeah,
right?
this is the gap. Exactly.
Yeah.
Exactly. But when you turn it on, take a look at this red drawing right here. It's going to shift around.
Yeah.
You see that? So what you would do when you have be adjust on is you would want to measure it out and see the difference in where that drawing is. So like this one right here, for example, we'll go to the 30-minute. I know that I originally found this zone right here.
Mhm.
I'm going to measure that out. Let's say 29,506 to 29, what is that? 29,213.50. Pull out the calculator real quick. 29,506.25 minus 29, what do we say? 213.50. So it's a 292.75 move. You're going to come over to your drawings. You're going to select them all. Actually, there we go. Select them all. And then you're going to come over to your settings. That pops up when you have all your drawings selected. You're going to go over to displacement. And on the first area, we're going to do plus 292.75. And now all our drawings are back.
Let's go. Yeah, that's perfect. That's perfect. I just manually adjusted mine, honestly.
Yeah. If you have a lot, it takes a while.
Yeah. I didn't have too many because my levels are more like intraday based. So
Yep.
and ES just glides beautifully in those ranges, right? So as we were talking about, like that, we're perfectly heading off into those NFP prices, right? We're heading off into these NFP prices, and now we start to observe, hey, how does market react here? Is the market just going to normally break above here so we can dig into all-time highs, or are we going to get some sort of pullback that creates that intraday intraday range that we can play for the rest of the week, right? Like imagine we got something like this start playing out for the week as we built into FOMC, right? Don't you think this also is just as valid for the next coming days to drive us deeper into all-time highs, right? Yeah, because the market doesn't always move in one direction. We could even get a pullback, fill this gap a bit, and then continue higher, which is perfectly fine. But the point being that you're not just trying to estimate when this thing will happen, when this move will get completed, when we'll reach all-time highs. For all I care, it could take 3 weeks to get there. As long as this area holds, guess what? My position is valid. If it doesn't hold and we push lower, guess what you're going to have to do? You're going to have to go to market, see where's the next fundamentally aligned area price can pull into, where the probabilities are increased that the buyers align themselves with the fundamental bias, in this case being down here in these price points, which is that gap area, right? Around the gap, these highs that we had on Wednesday, Tuesday. So that's where that is. But what that gives us in the short term is that, hey, we can ride this up to our next target being here, right? Into these NFP, pre-NFP highs. And then you can see here's where we had the NFP move and boom, outflows. So same sort of price anatomy now playing out in the opposite direction, where similar to this, you get a break above, retest, continue to these highs, break, come back down, accumulate before pushing higher. That could very much happen here as well. So you just have to keep that in mind. It's not about timing the market. It's about your time in the markets. Is that if you are in this position like I am, and let's say price continues to hold and your upside target is your all-time highs, right? Now you can see your risk reward, even if you were to go into a bit of a drawdown here, your risk reward still holds 1 to 4.7. That means for if you risked $2,000, you would make over almost 9 grand over here, or over $9,000, right? If you risk 1,000, you'll make 4.7K, easy. So as long as this area holds, it doesn't matter if we pull back in the next intraday period, that I can now build onto this position, maybe add more when the next intraday period comes in, session retraces, I get a pullback into here, I'll add some continuation above. Or if we just end up maintaining above this area for the intraday zone, 7,600, another good area to maybe build some of the position and ride it back up to all-time highs, given that sentiment is so fresh, given that all these headlines that are coming in are all adding to the peace deal or taking away from it. Now, unless you see a flip watch come here, there should be no reason for you to be looking for sells. You should be looking for those buys. You should be looking to take advantage and align yourself fundamentally and with the price scenarios as well, because that's what these scenarios are here for. They're here to help you out. They're here to show you this is the bias. These are the supports we have in case of S&P. This is our target level, but we can either pull back or we can see the continuation above, which is exactly what we've been seeing here, that continuation above, that continuation play above. And that's what we've taken advantage of right here, live on stream. Called out this trade. We called out this position as a scalp. But either way, it still gives you beautiful upside, beautiful risk rewards ratios.
That's it.
Kevin, I just have to, I'll be right back in 5 minutes, if that's cool.
Bro, go do your thing. Awesome. Absolutely. Nope, not cool, man. Once you're in market in the morning, you are here to stay. No, I'm just kidding, guys. All right, I would like to see a pullback from the S&P off of these highs. I know a lot of people are chasing these highs, but remember, our goal is to find a long entry on a pullback. If you do want to take shorts off the highs, you can try. Just remember, you want to go lighter in size at that point because you are fading the actual trend. I'd much rather wait for a long opportunity down here. But sure, if we could scalp a quick little short move, again, a lot of pain in the market. Where there's pain, there's gain. I know that a lot of retail might be chasing this, thinking we have to keep going. Meanwhile, like we know, check our equities. Nvidia's selling off. Rest of the equities pretty weak, except for Meta and Microsoft right now. There's another little drop there. We have our 15-minute time frame closing in 38 seconds. Not too shabby, not too shabby. Again, I want to see a pullback towards the 75.95 area. That would be ideal. 75.95. Let's see. And the reason I want to see 75.95 is because That is the last area where price was consolidating before we had our breakout. So we talk about not buying highs. We do not want to buy up here. We want to buy lows. So guess what? Break and retest is a great opportunity for buy and holds, right? For buying the lows. So that is what I'm looking for today. I'm not looking for any shorts at highs. I'm looking to see, can we pull back, find some longs near the lows off of 75.95, and look to take it right back to new high of day. We were just at new high of day. I do not want to be grabbing random shorts. Yeah, guys, the least you can do is throw a like, throw a subscribe. Hey, you guys definitely liked that up. I appreciate that, man. Our goal is always at least 50 likes in these streams. So keep that going. We drop the best education and knowledge for you guys. Let's take a look at oil. Oil is extremely consolidated. I'd mentioned the past few episodes with oil. Even if we do get some type of peace deal, peace treaty, the war looks like it's starting to come to an end. Most likely, oil is not just going to drop all the way back down to that $60 range. If it does, thank goodness, hallelujah, that would be great. Then gas prices, all these other prices are going to start coming down too. Markets are going to skyrocket. That's fantastic. CPI, inflation will slowly start to come down, but it's not going to drop like it rock, right? It's going to take a little time. Things have to roll over. Just like when the Iran war picked up, and CPI didn't just go from 2.4% to 4% in a month. It went from 2.4%, and we could pull up our market terminal. This is, man, Market AI is the best freaking terminal to know about what's actually moving in these markets. Like, there really is no competition. It gives you the charts of inflation, the charts of employment, everything. So here we had CPI 2.4% in February. We know this is when the war started to pick up, things started to escalate. Okay, well, then it went to 3.3%. Did not just jump to 4%, then 3.3 to 3.8 because oil stayed elevated. Now, from March to April, let's take a look at the oil chart. March to April, so here's March, here's April. We did not really skyrocket and stay higher, but what we did do was we stayed elevated and we stayed within this range. So the longer we stay elevated on oil, the longer inflation remains higher and impacted. We need to start seeing oil move lower below that range that we have marked out, below $75, for inflation to start pulling back a little bit as well. But like we saw with higher oil, it impacted inflation and it stayed impacting it. If we drop on oil below 75, inflation isn't just going to go, 4.2%, right back down to 2.4%. Things take time. Even, man, PPI coming out at 6.5 is wild. What crazy moves we had in the markets. Let's take a look at our chart one more time on S&P. Great example of why we're not just taking random shorts at highs. We know that buyers are able to step in with strength today. We do not fight the trend here on market in the morning. We do not fight the trend, period. Gold also pulling back. Now, I know somebody asked before about gold shorts, and we sort of laughed about it. We said, no gold shorts. Of course not. Go rewind, watch the full episode. But that doesn't mean gold shorts cannot play out in a short-term move, right? Because guess what? For markets to pull back, we need to see selling, right? So we need to see selling bring us back on gold. The area I'm looking for, 43.30 on GC futures, would also be, let's find it for you Forex folks out there, would be around, here it is, 43.10. 43.10 here on XAU USD. So 43.10 on XAU USD, 43.30 on GC futures. These are the two main spots that I'm watching for possible longs on gold. Nothing crazy. I'm not looking for us to sell off 120 points and then move higher. Just a brief little back to the bottom of the range, 46 points, and then pull back up to those highs, another 50 points in our favor, 60 points, I should say. So keep an eye on that. We have headlines. Look at that, man. So happy we're not just taking random shorts in the market. Let's take a look at our market feed, our news feed, see if anything has come out recently. Let's see, top diplomat, nothing. EU ministers agreed that Lebanon must be covered by U.S. Iran seized deal. Okay, so just some small updates. This is not a headline that would really move markets to the upside or downside. Just some follow through from those overall headlines we had. Now, don't forget, guys. We have breaking news, but we also have high impact. High impact is going to be your go-to check every morning in the market. Okay, what high impact headlines have we had? Iran's mayor says final Iran US agreement would be endorsed by UN Security Council. Final negotiations will not begin before the release of half of Iran's blocked funds, waiving Iran's oil sanctions and lifting of the naval blockade. So again, Iran's saying we want our money back, we want the blockade lifted, which Trump already mentioned. We are lifting the blockade, so things are starting to move in that direction. But we also know that the US, Trump most likely isn't just going to be so quick to say, yeah, here's sanctions lifted, or here's some money for the, everything that has been going on. Let's see. Iran says Iran US includes half of Iran's 24 billion blockade funds must be available before final talks start. 24 billion blocked funds. Again, is this something that Trump's just very easily going to be like, yeah, sure, let's run that through? No, absolutely not. So keep an eye, be careful. Let's take a look at markets, see if we've gotten any trade opportunities. Look at how we're rejecting this area. So as much as I don't want to take any shorts from these highs, I also don't want to buy these highs. It's important that as traders, we don't just understand where we're looking to take our trades, but we also understand when to not take any trades. Hey, Kev, what is the red level on ES you have on top? Is that a supply or maybe all-time high? Great question. So that is a, what was that? I believe a 4-hour, I want to say a 4-hour supply area. Look right over here. This was an area where price consolidated. This was on June 5th, about a, let's see, how big of a range was this? 20-point range. And then look at the sell-off we had afterwards. 200 points. So we had a lot of selling pressure coming from this area, which is also one of the main reasons we're struggling to get through it now. Does that mean we're not going to get through it? No, I'm using this area as a point where I want to see price react to, like it's doing right now, pull back, give me an entry, and then I'm looking for us to break it. But I'm not looking for this rejection to give us that same 200-point drop because market conditions have changed. There are different market conditions. We're in a different market environment, so expect different reactions to the zones we have. Doesn't mean we get no reactions. That's why, again, I'm looking for this bit of a pullback from here, but I know that this pullback is not going to be as strong as the last time we came from this zone, which again gave us 200 points on the ES. So maybe, like we said, maybe it gives us a 30-point move. I want it to give us a 30-point move. That will give us right back to our support area to go along. We take this for a nice 3-to-1, could tighten up stop loss, make it a 4-to-1. And that's the trade I'm looking for. This is my A+ area on the S&P today. We see VWAP is also moving higher with price. We did have a low volume shelf right in here. I have that marked out with this rectangle tool right there. This is around 76.04 to 76.01, so an extremely small range. I wouldn't be completely against taking longs in this area versus waiting for this full pullback. However, I would really need to see markets start to hold this area. And again, it's not like we're looking for a counter trend trade when we take longs here. So if it does stop us out, we're just waiting for the next buying opportunity. But right now, this would be trade setup number 1 that I'm looking for. Buyers to start to hold. Of course, it's a fair value gap. It's a low volume shelf. And not only that, if we pull back and hold, we just came off of higher highs. So we see that price has been making higher highs, higher low, higher high, higher low, higher high. So now pull back and create a higher low. We're looking to trade the trend. The trend is our friend is not just a saying that people say. It is a way to live. All right, no, you getting out of here?
No, I'm here for the next 20 minutes.
Oh, let's get it, bro. Let's get it.
Let's get it. So
Awesome.
yeah, just going over some of the setups we took. These buys on ES are still riding, and as I mentioned, that this was that A level setup, right? This is your B setup because this is later into the scalp. So this would be like you positioning yourself for this session to come and going into the day. This is like, okay, you see the move is happening, you take advantage of it, you take your jab at the market, and then you look to see where you can exit. And some of the exits that we have are a bit more into the 76.30s on ES, on S&P. And that's a good exit point for your scalp trade. And also for your intraday trade, you can look to trim some of your position off at that level too, because you want to take it level by level. You don't want to get caught up and give away some profit, because it's always better to take profit than leave it on the table. You don't want to regret leaving all of it. Just take some. And I've always noticed that every time I've done that, it's always played out way better for me long term, because mentally you're in a better position. You've taken profit off the table. You understand you've taken your risk. You made money from it, and now you're better aligned, mentally better for your next trade, right? Worse is you let it round trip. Done that, been there, done that so many times. I've been up $6,000, completely let that trade round trip, and I've actually like gotten out at break even, or maybe even took a loss because I got attached to that position, hoping it would hit my target. So it's always better, and these are just lessons you learn over time, right? So that's why I'm in this position over here. Now, my plan with this, and I've explained my plan with this, right, is that even if we were to start consolidating in an intraday manner like this, that's fine for the time being. I would like to see how we could react to this potential area. Okay. So if we come back down here and we start reacting to these lows and buyers start jumping in, that gives me even more confidence in that intraday positioning playing out, and markets doing something similar where you have this area of price consistently being tapped for orders to accumulate, for more buyers to jump in. And then when you do have that one-sided orders in the market and you do get catalysts or just excessive orders in the market, then you get that easy rally going back into higher prices. So that's something we're watching out for. And that's why I also mentioned before calling this trade out that this sort of trade would be your B type setup, that you shouldn't have too high of expectations for this, because your downside is also greater on this, is that price could actually come down to here and then reverse, but maybe you get stopped out because your stop loss is here. The point being that here you have probability that price can come back down to these lows before going higher. And it's similar to what happened on gold just a few sessions ago, just overnight, right over here. And we'll do a little replay. In the buys that I was in, I had multiple positions from right here. And then what ended up happening is that as this candle was pushing up, I bought another position around here. So when price was up here, I see there's a resistance to my left. And now what I start doing is I start setting my positions here at break even, because this is right now floating at 300 pips, 300 points on gold, which is the $30 play, right? So I start setting my stop losses at break even. I set this one to break even because this is a higher position. This is like a B level position, right? Similar to how this was right here. This is like a B level position. Now, this position, unfortunately, got taken out, and it got taken out at break even because what did price end up doing? Price wasn't able to break those highs, so it came right back down to that same demand area where we saw that buying accumulation happen previously. Buyers came in, and then now instantly you can start to see how structure starts to change and how buyers start entering the market. You start to see that seller exhaustion. Those highs get retested. Now you're retesting this accumulation again. And now that leads to break above that area, retest, and then that was the session low. And now we're all the way up here, and this was the positioning that we were in. So you can see how that one of those positions got taken out, but the rest of the positions were good. And that's where that positioning comes in, is that let's say you took this, price could come down to here, maybe retest this area before continuing towards the upside, but you're still good. You're still in this play because you understand this is more of an intraday play, right? Yeah. Versus if you think more of a B level setup, and let's say you're in this trade and you didn't get out because your target is here. Now you have to manage this, right? Whether you take a break even, whether you're close to break even, or you have a wider stop. But the point being that this type of setup is more of a B type setup because of the fact that the buying happened here. The buying started here. So if you're not in this, you're kind of taking like the shittier setup. You know what I mean? Like you're kind of buying the bananas at $4 rather than 250 on its way to $5, right? It's still a good buy, but it's not as good as a buy as it was here, or it's not as good as a buy as the bananas would be if they were $1 a bunch.
Bro, we gotta get in a lab of banana, man.
It's just the easiest analogy. I feel like everybody understands the price of bananas are, you can just try to break down that, hey, just because you're bullish on something and it pulls back lower than you were expecting doesn't mean it's not a good deal anymore.
Yep.
It's actually a better deal. Like you have to think about it in terms of an auction or a discount.
Yeah. Yeah, no, I agree. 100%. Somebody asking about what happened to the market giveaway. Nilo, if we're still running it, I have that.
You have the wheel?
Yeah, I got a wheel.
Yeah, do you have the names of the people?
Yes, sir.
On the wheel. Let's.
Yo, you guys know I stay prepared, man.
Yeah, dude, Kevin. One thing about Kevin is that I can always count on him to come through with anything. Like, bro, some of the greatest ideas, some of the most initiatives. Like market in the morning going this late.
Yep,
it's his idea. All right, let's spin it, Kevin.
That's it, bro. Guys, let's get it, man. Let's get it.
Do your thing.
We got Akash. Akash, congratulations.
Right. Is Akash here? If not, we'll save this. We'll save his name. And then we said we'll do 3, right?
Yes, sir.
We'll do 2 more. If Akash isn't here, don't worry, we'll save it. And we'll announce it on our socials. So if Akash ends up seeing this, man, hit us up, Akash.
You got do you have it saved somewhere? You
I got it.
Awesome. All right, guys. Next one. Let's go. Let's go, guys. Run that like button up. What other channels are free and do giveaways at the same time? I mean, come on now. Luke
Morales. Is Luke here? Luke's not here. Let me screenshot this. Luke, we'll reach out to you, buddy. Or you reach out to us if you see this. We'll post on our socials. We'll announce these winners and then get in touch with us, and we'll set you up with some nice accounts.
Let's get it, man. All right, guys. Last but not least, drum roll. W's in the chat. Hope you guys are doing well today. Let's see who wins. Winner, chicken dinner.
Solomon.
There we go.
All right. Cool. I'll keep that. I took a screenshot of it. Awesome.
Oh man, guys, if you did not make the list for this week, we put out the form last Market in the Morning episode. So unfortunately, if you did not make the list, you're just gonna have to keep tuning into Market in the Morning for our next giveaway.
Yeah. Thanks everybody who submitted. Yeah, tons of people submitted. Wow, awesome. And we'll reach out to you guys. Perfect.
Awesome, guys. Awesome. How can we claim? We'll reach out to you guys. Like Nalab said, he took the names down. I do believe I have the emails as well in the form. I made sure that in the form you guys were able to fill out your name and your email. So we will reach out, like Nalab mentioned, so we will also post it on the Market AI terminal.
Accounts, yeah.
Yep. Awesome, bro. Good stuff. Nil, you seen any trade setups? I'm waiting for this.
Just the same ones that we were talking about, just playing out with ES, continuing to play out over here. I'm in these buys on ES. This was the B level setup we were just going over. And these are good to ride out, in my opinion, up till here. Like we are good before we see any sort of short-term resistance in price action before it makes its way to all-time highs. This would be a good area. As you can see, when price taps into here, we often see buyers liquidate their positioning, and before sellers jump in to drive price down to the support area, which in this case again lines up with the same area we took the buys. So as long as this price handle holds right now, this lower 7,600, that we can then continue to make our way into 7,630s, and that would be a good area for people to start taking some profits on their positions, because this still is like, this would be massive. This is still like a 50 point move, right?
Yeah.
50 point move from these lows and like a 30 point move from here, which gives you a nice 1 to 3 risk reward setup, 1 to 2.8. So great play over here on this. On gold, again, gold is just maintaining that bullish upside, guys, that if this holds right now, if this 1 minute support starts holding, that this gives you enough upside to go, like if this was holding now, like we could head up into here and then retest this, And then guess what comes right after that? It's 4,400. So that's another play that could happen on gold right now to keep an eye out. That if we just keep maintaining this price action and this lower time frame structure, given that gold remains bullish, or given any pullback, even if we get a pullback, as I was mentioning, that once we break these highs and we get this price holding above 4350s, as we have here, and now we're double bottoming here. If we start seeing some price action like this or continue down here and then retest and then continue up, this gives you enough confirmation that once this area breaks and we get above or react to 4375, that we can then continue to above 4400s. And 4400 seems like a pretty solid price point for this session, because given it's not that far. Like we pushed from just the start of this session to up here an equivalent amount to what's left to push up. So as long as we maintain above here, that's what you could watch out for. And this is a short-term adaptation to what's happening on the peace talks front and how it's being solidified. So, and that has just brought like more outflows from dollar, right? So dollar weakness short-term, bulls short-term, as well as US equities holding bullish with the change in sentiment. That's being more aggressively played out across equity markets, right?
Guys, looks good. Let's see, where's gold? Gold, any pullbacks? Just chopping around at these highs
just
right
drop
now.
above 4350s. That's why we were mentioning, right? That's a key area. As long as we're maintaining above here, we're bullish. And guess what? It's like it's this scenario playing out, right? Like it's just like the scenario of like buying above and then holding those buys towards the upside. And you can see then if this area holds as it's been holding here, this lower time frame price action, let's say, continues towards the upside, you'll see then we'll take it level by level. How do we react at 4375, right? How do we react at this area, this psychological price point? Do we break right through it? If we do, where do we head next? We head to 4400. Or do we pull back a bit deeper into 4450s, retest, and then continue towards the upside? Now, again, game of probabilities. Let's say some reason gold can't maintain above here. We pull back down to here, which then we'll start to observe for more buys and see how price can react there. So it's all a game of just waiting and seeing, guys. You know, I'm just waiting and seeing what could happen. Where could price go? What could cause it to go up? Am I on the right side? How is lower time frame price action playing out as per my expectations? Right?
Yep.
Are we coming back below here? And if we are, then are we looking for sells, or are we looking to get the high probability buys that could play out from here going into FOMC? Right?
Yeah.
Blockade.
Good, man.
Advice for blockade on Iranian port continues pending June 19th. Ships affected by blockade should not attempt to cross until explicit direction is given. U.S. military advisory says U.S. blockade of Iranian ports remain in effect pending completion of agreement with Iran scheduled for June 19th. U.S. military, that's 4 days from now. Yeah, so we're getting these minor headlines that are holding a bit more weight on gold. But let me just go back to open up another window. Yeah, but on ES, we can see ES is still just holding that area, and gold is just seeing that short term.
Yep.
But it's still holding above this price point. So, yeah.
Yeah, I'd love to see a pullback on gold, man. You know, give us a deep
That'd be
pullback.
awesome. Yeah, give us some pullback. That would create a nice range towards that upside, right? That upside of, let's say, if we were to reach 4,400, that would give us a beautiful range. Imagine riding it from 4,300 to 4,400. Mwah, beautiful play, right? Chef's kiss.
That's
Chef's kiss, yeah. Or otherwise, again, like if this holds in the short term, then New York session volume can just push gold towards the upside, like in a manner like this.
Yeah. Bro, ES is shaky right now, man. Really trying to hold that area, that 7604. We did not test it, bro. We came down to 7605, and we ended up holding.
Yeah, it's holding. It's holding as long as the structure remains bullish. We're still early on the session. We got a whole day ahead of us. So, but yeah, man, this is looking good to hold off into the intraday, and then gold. We'll observe and see how this price action reacts here, because gold is right now, if I close my drawings here, gold is bullish, right? We see gold being bullish. we see continuations above heading to higher price points. But what we have to keep in mind is that we have been buying since pretty much market open. Like markets open with a gap, we've been heading towards the upside. Now, if we get some sort of pullback, and depending on where that pullback goes into and what intraday area it goes into, then that gives us nice range towards the upside, right? Otherwise, if we continue to see price hold above this key area, 43.50s, then you can continue to see gold in the lower time frame continue off of that bullish bias, off of Strait of Hormuz, and peace deal happening, and a weaker dollar at the same time playing out, right? So with the weaker dollar, with gold holding more weight, more optimism in the markets, with ES holding more weight, with our buys that were in here from start of market in the morning, about 30 minutes in, we called out these buys. And yeah, those are just riding clean, and we can expect to just ride those up in the intraday period as the sentiment just holds more optimistic, with stock market buyers being greedy and just being super crackhead level greed of just wanting to buy the dip constantly. You can see that once the buyers got in, we had the peace deal, we had the gap on market open. It's just been buys. We called out the buys here that aligned perfectly with our scenarios that we mapped out over here, right? We talked about it that, hey, when sentiment's fresh, this is how the markets move, where they do these minor pullbacks. Sorry, I did the adjustment and it messed up these drawings. When they do minor accumulation and straight rips after that, straight rallies. And when that sentiment is fresh and it's holding, and the peace talks and the peace deals, and we can open up the breaking news, and you can see that, right? We can even go down to the one from when Trump said that, right? Like, what was it, before market open? And this was about 5:30 p.m. Eastern, or around that time. So let me just go to these. These are exciting. Yeah, Trump says Netanyahu backs Iran talks, declares Iran deal complete, 5:34 p.m., 58 seconds, 25 minutes before market open. And you can see how that sentiment was brought, because markets weren't expecting that to happen right at open. You can see the nature of these gaps across the board in the markets, where now if I zoom out here, gold, massive gap, S&P, massive gap, dollar gap towards the downside. So with that sentiment shift, adapting to these scenarios, adapting to the change in bias and what's actually pushing gold, influencing gold right now, understanding how these event scenarios can play out to our higher targets of 4,400, or if we could get a pullback to one of these areas where price pulls back and then we get better entries. But we also just mapped out these lower time frame buys that we were discussing, that if price maintains above 43.50s, we can use the continuation of the sentiment and it holding more weight in this session and ride those up and follow this pathway of price for this session. And right now it's playing out. So this looks great here. ES, again, we've called out those buys all the way from these lows in earlier on this session. And then I also called out this more B type trade, which is not your A level trade. It is a lower quality since it's after the move, but this would be more of your scalp trade that you ride up to here and then you take profit while you're watching the breaking headlines coming in. So Warren questions, Black. Okay. U.S. military advisor says blockade of Iran. Yeah, we already saw that one. Let's give that one a break.
Boo, boring. TLE, what's going on, man? He said he's new to the stream, just found it, just got rinsed so many times trading meme coins. Yeah, bro, forget meme coins. Come and trade some real financial markets. Gold, S&P, NASDAQ, even silver is a great asset to trade. And then he said, do you guys tell your viewers which trades you take on stream? Absolutely, bro. 100%. We're here to give you guys.
You can watch the whole stream. You can see this one that we talked about, this setup.
Yep.
You know, I'm always honest about the trades I'm in. I even talked about how for the past 10 weeks, you could have been buying oil on market close, right before market close, and on Sunday market open, oil would pop up, and you can back test this, right? And I was honest about it early on this stream that, hey guys, I bought oil again for like the 8th time in the past 2 months or 3 months at market close, and the peace deal just can happen. I was hoping for weekend escalation, and then the peace deal happened, so I took a loss on that. But then we also talked about, hey, we were in these gold buys from here, from market open, from this low, And then this was another great opportunity, plus this. And now, guess what? This is another one we just talked about 20 minutes ago, breaking down this entry style and how you could take an entry if we maintain above 43.50s going into 43.75. See how we react there. If we break above, guess what? Your intraday target of 4,400 would be met, and then we could see a deeper pullback. Okay. Then we could see a pullback where sellers drive price down, and then you get that scenario play out where you get that higher low created and something like this happens in the next intraday period and you take advantage of those buys, right? On what that looks like on ES is that we knew sentiment shifted. We knew that this structure had completely shifted last week. Over the weekend, PCL confirmed. Now we're just riding the same buys towards the upside and holding our intraday positioning while managing the more scalp trades if that's what you guys took. I'm more of an intraday trader. I like to position myself from the better part of the move rather than trying to do the later half, right? So in this case, I'm holding these ES buys, and I would love for these to eventually play out into all-time highs, right? Back into all-time highs. But I also understand there's certain events that are coming up, like the interest rate decision and the press conference, where this is going to be Warsh's first conference. And he's going to take more of a hawkish stance. But as we were talking about earlier, it's been largely priced in. Like we've had those hot data reports with NFP where we did the NFP call here and we talked about the shorts on US equities when NFP came out. We talked about the buys on gold, on sells on gold when NFP came out. Plus we were pre-positioned. If you guys remember, we took the sells on gold here. We took the shorts on gold here, and all of these were called out on stream, and we faded out all of these bullish moves that were happening while everybody else was trying to buy it. And then by the time NFP came in, guess who was positioned correctly in the markets? We knew it. Like we talked about this exact scenario that, hey, if these play out on that day, you can go to market in the morning on Tuesday, June 2nd, Thursday, June 4th. We talked about this, that if these start playing out, we will position ourselves for the downside. You get what I mean? Now you are positioned yourself for the downside and you have a much better opportunity of winning. And it's the same thing here. It's the same thing we did for CPI as well. We had positioned ourselves in the market before CPI even came out on the short side, and then CPI came out hotter, and then that trade ran 3,000 points, 3,000 pips. So think about in terms of that, when you're following the macro bias, macro perspective, everything just plays out so much cleaner. You have way more conviction in the market. You understand what's going on. You know, I need to be looking for buys on S&P. They could come back from a deeper pullback level, but just because we pull back a bit deeper doesn't mean we're bearish. Bias is still bullish because the peace deal is unleashing global risk appetite. And now investors and institutions are becoming crackhead greedy again and back into US equities. Remember, we talked about it. We've been talking about it since the buys down here. We called out the buys here, every single buy since then. We talked about how easy it's going to be once sentiment's clear, because equities and stock market buyers are just so greedy. They will run off the slightest bit of optimism, right? And we saw that. That's what happened here. That was a turning point where structure started shifting. Structure shifted from creating this corrective structure in the intraday time frame to now all of a sudden Trump coming out saying, hey, peace deal is almost done on Thursday. Structure starts shifting. We called out the buys here on Friday, right at these lows, talking about a pullback after market open and even on NQ. And then we had the peace deal happen right before market open, where we got further buying pressure, happened overnight, and now we're continuously riding these buys. So guess what? It's as easy as that, because we built a platform that does all the heavy lifting for you, that tells you, hey, if I click this candle here, risk on relief rally after Trump cancels planned US strikes against Iran. He said Iran submitted draft nuclear deal via Qatari mediators suggesting diplomatic off-ramp. Trump comments signal deal closed and strikes canceled, sharply reducing war probability. Oil dropped, dollar softened at safe haven, and supply risk premia were unwound. Wow. And now we're taking advantage of that. Like, that's how easy it is. You get what I mean? Like, you can really let a platform do a lot of the heavy lifting in terms of keeping up with the macroeconomics and geopolitics. and then you focus on just your entry and understand that, hey, we can have these scenarios where we pull a bit deeper, but eventually we're going to head up towards the upside. So I'm going to focus on taking the buys and not take any of the sells.
Bro, could you hear me? Am I back?
Yeah, I can
All
hear
right,
you now.
cool. Bro, my internet just like, I don't even know, man. My internet went out, and then I don't know if you guys use Ring, but I got like 40 notifications of other people like, is anybody else's internet out right now?
That's hilarious. Well, I'm
But
glad you're back
I
because
set up a
I got to head
hotspot.
out, man. I got to head out. I'm late for a meeting.
Bro, do your thing. I appreciate you for sticking around through
Anytime.
that. I do apologize. Ladies and gentlemen, that was this episode of Market in the Morning. Please join us every day. We'll be back tomorrow. We have a Spanish episode later as well. Yeah, welcome. You're right. I had to make that quick call to Trump and see what's going on. But have a great rest of your day, everybody. Trade carefully, and I will see you guys all tomorrow. Take care. Peace.
Take care.